Well, welcome everybody to the Atlanta real estate investor community, and we're going to talk about raising private funds today. So, our agenda today is how to raise funds without ever having to ask to borrow money. I want you to get rid of that word lend and borrow from your vocabulary. I want you to fund deals with no money or any credit, okay? And build relationships by creating value for others. So my name is Bill Oehme, and I'm a business owner, real estate investor, a lifetime student, and a value creation expert. So you can see some of my little houses. I'm a big little house guy. There's my phone number. And maybe like so many of you out there, I did the corporate job thing, right? I worked 60 hours a week for a company. I was always on call. And after 23 years, I was freed up to pursue other opportunities. But with real estate, which I couldn't do in the corporate world, I was able to become financially free within 4 years. And now I'm helping others achieve financial freedom. And a statistic that most people don't know is 90% of the millionaires in this country do so by owning real estate. Pretty compelling statistic. Okay, so let's talk about funding deals, because this is one of the two areas that people are always concerned about. The other one is how do you find the deals. But funding deals, number one, your simplest way is if you have cash. Okay, it's the simplest, it's the quickest, you stroke a check. If you don't have cash, you might be looking at a bank loan. Okay, but if you need a bank loan, we're talking about you need good credit, you need cash flow, preferably a W-2 job to qualify. You need down payment, which means you need some sort of capital, and you're going to be limited on the number of loans you can take out, and loans take time, so you can miss deals because you're using bank loans. Lines of credit are a great way. So they're similar to a bank loan, but they're reusable. So they're actually close to cash, right? You just write a check from your line of credit and you can finance a deal. Seller financing, subject to. Other creative acquisition strategies are great tools for you to fund your deals. Retirement accounts, both yours and other people's. Okay, and part of what you're going to learn how to self-direct those retirement accounts so that other people can use their retirement accounts to fund real estate deals. Hard money lenders and institutional money. Guys, whenever you use this money, you're going to have to play by their rules for their money. Usually there's points involved, usually there's time limits involved, and if you mess up, you could lose the property. Okay, so that's the downside of hard money, institutional money. But let's talk about private lenders, because this is a very underutilized method. Okay, and what I want you to do is focus on creating value for your lender rather than asking for money. In fact, I want you to just get rid of those words borrow and lend. That shouldn't even enter into the discussion. Work on building relationships with others rather than finding money from others. Nobody wants to be felt like they're being looked at as a lender, okay? Use an indirect approach when talking with your potential lenders, okay? And create value, and you will attract infinite resources and relationships. Okay? Now I want you to learn how to use all of these funding methods, because believe me, certain funding methods come and go during the business cycle. Okay, so if you only count on two different ways or one way to fund your deals, let's say you only focus on bank loans. If the banks change their rules, your business is stopped. Okay, so you want to have all these different arrows in your quiver in order to finance deals, especially good deals when they come up. Okay, so raising unlimited funds, private money. Let's start off with this premise. We're already all real estate investors, so let everyone know this. Starting today, your response to, hey, what do you do, is going to be, you're going to talk about your real estate investing, okay? And this is going to give you credibility, right? So when somebody says, hey, what do you do? Hey, I'm a market analyst and I'm a real estate investor, or I'm a retired retail manager and a real estate investor. See, actually everybody is a real estate investor. If you live in a house or you live in an apartment and you pay rent or you pay a mortgage, or even if you're mortgage is paid off, if you're paying taxes and insurance, you're transacting, you're trading money for real estate. That makes you a real estate investor. The question is, are you on the really profitable side of the deal, or are you on the not so profitable side? Okay, so everybody, let's get past that. You're a real estate investor, and that should be part of your personality. Now, your task before you raise funds is to structure really great deals. And this is something interesting. If you're structuring deals and you're having a hard time raising funds, it's mostly because you're not structuring good deals. That's the marketplace working. It's saying, no, 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 we're not going to let you fund a bad deal. Okay? So your task through your education and your relationships is to structure really great deals. And that's going to come down to, like I said, education and relationships. And you got to be able to explain those deals in about 30 seconds or less. Okay? So here's what I want you to do. When you're looking to fund a deal, just call up people you know that might be interested in real estate, might not, just might be smart people that you respect. And ask them for their opinion. So, hey Bob, how's everything going there? It's good, it's this, it's that. Great. Hey, I know you're an experienced real estate investor, or I know you're a great business guy, or whatever the person is, and I would really like your opinion on a deal. You got a few minutes for me? What are they going to say? You're not asking them for anything but an opinion. They're going to say yes, right? So now you go through the opinion. So you got to showcase the deal. So, hey, Bob, let me tell you this deal. I've got this little rental house. It's worth about 70 grand. I'm picking it up for 30. Can rent it out all day long for about $700 a month. I got some tenants already. I've done this before, or I'm working with a guy who does. And want to pick this thing up, get it into the portfolio, and start making passive income. So you go over the deal, maybe go over the numbers. Hey, it's going to pay me about 24% a year. Here's what I'm going to do. In other words, what do you already have in place? And then your question to your prospect is, hey, do you see anything I can do better? And that's a very honest question, because if you're talking to an experienced investor, you're going to get good suggestions. You may have a blind spot to something about the deal, right? And the person will say, well, okay, did you figure on this? Did you think of that? And it's like, no, I didn't. Wow, thanks for bringing that up. So I'm going to look into that. But most of the time what you're going to get is, no, that looks really great to me, right? Because you know it's a good deal. That's the key part. You already know it's a good deal. Okay, perfect. Listen, I really appreciate you putting eyes on this for me. Sometimes I don't see everything that's in a deal. Thanks for your help. Next time you're in town, let's go get lunch. Okay? Hey, by the way, if you know of anyone who would like to be part of this deal, would you please give them my number? Now look at the words in that phrase. If you know of anybody that'd like to be part of this deal, would you please give them my number? See, I'm not imposing and saying, will you give me someone else's number? I'm not putting anybody on the spot. I'm just saying, if you know of anybody, could you give them my number? So is there anything uncomfortable with that request? No, because they can easily just say, hey, no problem, and do nothing. And nobody's any worse off. But it allows them to, instead of trying to think of ways to turn you down, they're now thinking of ways to help you out, because you didn't put them on the spot, right? But here's what will happen. If the deal is good enough, about 80% of the time, you'll hear, well, what about me? If those numbers are real, I'd like to be part of that deal. Can we go over that again? See, the person opts in for further discussion. The person volunteers themselves for further discussion. That's the comfortable arrangement of the indirect approach. If not, hey, not a big deal, right? If they're not interested, they're going to give your number out. They can be a hero. And by the way, you can call them next time and ask them about another deal. They'll answer the phone. If you call somebody up and you say, hey, I want to borrow money from you, what's going to happen the next time you call? Exactly. They're not going to answer the phone. They're going to screen your call and go, oh, God, not this person again. Okay, don't be that guy or that gal. Okay, so strive to create value for other people. Never ask to borrow money. Okay, so if somebody says, hey, I'm interested in doing it, oh, okay, you're interested? Perfect. So how about I do all the work and you fund the deal? That's going to be probably yeah, because that they don't have the knowledge or the time to do the deal, but they may have the resources, the money. Okay, you want to fund the deal? Well, yeah, I'll fund the deal. What's the terms? Well, what are you making on your money in the bank right now? Maybe 1 or 2%? Yeah, like 1.5%. Okay, now I can borrow money from the banks at about 4 or 5%. What would you consider an attractive interest rate for your money? Allow the person to give you a suggestion. You know what the suggestion will most likely be? And try this out, it is so funny. What will they say? They're going to say most of the time 7 or 8% or 10%. Something magical about 10%. But notice how this question is couched. This question is thought through. Okay, you'd like to fund the deal? Great. What are you making on your money in the bank? And I give them a suggestion, maybe 1 or 2%. So I don't leave it open. And then, okay, and I can borrow money from the banks at about 4 or 5%. And you could change that to, and the banks are lending at about 4 or 5%, if you want to use that phrase. What do you consider attractive interest rate? So I've framed the question. I didn't just say, well, what do you want on your money? Because that could be 35%. What do I want on my money? I want 1,000%. And now you're back to note there's a disconnect there. Now, if the person says, hey, I really want to get 15 or 20% of my money, you say, well, you saw from the deal won't really support that good of a return. I don't think this deal is a good one for us. Okay, not a problem, right? What will usually happen is if they say that, they'll be, oh yeah, but I don't need 15%. No, you're right. Maybe 7 or 8% would be great, right? Because they might be just feeling out to how much they can get for the deal, for their money, okay? But it will be 7 or 8% or 10%. Okay, perfect. So that works for me. Now, I only need the money for about a year. Is that good with you? That's a question. And they'll be like, yeah, 1 year sounds good. Okay, but I have some rules. Now, they're thinking these rules are bad, but these rules are good. You have to take a monthly interest check. Okay, so if you're going to lend me $20,000, and this is just numbers, at 10%, you're going to get $167 a month, just interest. Are you okay with that? And they'll say, well, yeah, you don't have to. It's like, no, that's a requirement. You got to take a monthly check. Are you okay with that? And they'll be like, well, hell yeah, I'm good with that. Perfect. Second thing is, look, if I sell the house while you're lending on it, you're going to get a $2,000 bonus. And guys, that number can vary. Okay, whatever you want it to be. But it's just a little equity kicker. That's what it's called. Is that okay? Is that okay that if I sell the house while you have the note, you're going to get an extra chunk of money? Is that okay? What will they say? Yeah, okay, yeah, no problem. Didn't cost them anything, right? Got one last request or one last rule. If you need your money back early, let's say you need it before the end of the year, just give me 2 weeks and I'll cash you out. And you can make that 1 week, whatever you want, okay? Is that okay? And they'll be like, yeah, that's fine. See, none of that is a rule. None of that is a bad thing. Those are all good things. So technically, it's not even a 1 year commitment. It's a 2 week commitment. Okay, so all of this is good. Okay, perfect. You know what? I'll draw up the papers. You make out the check to my LLC. Do we have a deal? Yeah, okay. Okay, anything else? Any other questions? No, sounds pretty straightforward. You'll give me an address or a closing attorney or somebody to send it to. Yep. And you'll get a security deed and a promissory note, just like a bank would. And I'll have insurance on the property. And we'll handle this just like a regular financial transaction. Yeah, okay, we're good. Okay, so here's what happens. You start the deal. You got the money, you fund the deal. Every month they get a check. Maybe they get a picture of the happy tenants. See that picture there? That is a great freaking picture. Your lenders would love to see a picture like that with their first check. Or maybe there's a watermelon festival in your town. and you take a picture. I've done it with a police blotter. I'll cut a police blotter out, and I'll put little notes next to all of the criminals that say, not our tenant, not our tenant, not our tenant. Like a joke, right? Okay. But some sort of thing. The first month they get the check, they open the envelope. They're like, wow, oh yeah, here's a check. I remember that deal. Okay, fine. What does that check immediately tell them about the deal? It tells them that the deal is good. It's like a heartbeat, right? It's like on the TV show when the heart goes ba-bump, ba-bump, and they know the patient's alive. They know at that moment that deal is on track, everything is fine, and they don't have to worry about it. See, it's like they can check it off their list for another month. It's sort of like when you get a rent check. You get a rent check from a tenant, you know, okay, don't have to worry about it for another month. So they know right away that the deal works. Now, the second month they get a check, and either their spouse sees it or they brag to their spouse. So they'll be like, hey, honey, guess what? We got another $167 check. Really? From that guy I told you was a scammer? Yeah, but it seems like the money's coming in. Oh, really? Yeah. Okay. Wow, that's great, right? So now the person's a hero with their spouse because their decision making was correct. The third month the check comes in, who's waiting at the mailbox for the check? Exactly, the spouse. Now the spouse is in on it because he or she is like, hey, this was a great idea. I'm glad it was my idea, which it probably wasn't. But do you see that everybody, the goodwill that's being created around this situation? So every month when the $167 comes in, somebody's going to dinner. Somebody's getting, I don't know, their car washed. It's a little special thing because now you have this money coming in. This is what's so important. Every other investment that they have, what are they getting every month or every quarter from their stock portfolio or whatever? They're not getting checks. They're getting statements. Do you get the same emotional response when you get a statement? Especially if your values have gone down? No. This is real money. Okay? This is narcotic. This is an endorphin rush. And when you realize how important passive income is, you will start focusing on it. Okay? So after 12 months, the checks have been coming in. And by the way, maybe there's a little thank you note. Hey, thanks for, having confidence in me. Here's a picture of the tenants. Thanks so much. Here's a picture of, like I said, the big watermelon we grew, or the high school football team, or just something. Some sort of correspondence, okay, other than just a check. Hey, Bob, it's been 12 months, man. Wow, time flies. Yeah. Hey, listen, do you want your money back? Where should I send it? What will they 99% of the time do? What will be the response? What will they always say? Be like, no, man, no, don't send it back. We just keep it riding, and can I make that $167 a month? Because that's nice. I don't know what to do with the money, man. If you send it back to me, where am I going to get 10%? That's what's going to happen. By the way, I got another $100,000, or I got a buddy that's got money and he wants to get in on these deals because I told him about it. Can we do more deals? They're going to want to do more deals. What was the first 20,000, 30,000, whatever it is that you got from the lender? What was that? More than anything else, it was a test. It was a test to see if you're real. Okay? People can take a flyer on $20,000 or $30,000. Not most people, but a large segment. Anybody that is an investor, they can risk 20 or 30 grand for a busted deal. They can't risk 120 grand. But if you turn out to be the real deal, you are in like Flynn. Okay? You're a hero. Okay? Especially with interest rates so low. Then they go to a party. And this is a great Dr. Dave story. So I have an investor that invests with me and been getting a whole lot of money and very happy. By the way, let me deviate for a second. Let's say you pay your investors over market. You could really borrow the money at 5% and you pay somebody 10%. Is that foolish? No, that's genius. That's genius because they know they're getting more than market value, right? So the power equation is definitely in your favor. You're doing them a favor. Do you see the difference? Before this conversation, they were doing you a favor. You were begging for money. Now, you're like Johnny Appleseed throwing value all over the place. Okay? So they go to a party, and their friends are all talking about what they're doing and everything, and somebody's complaining that they're only making 1% on their money, or the stock market's up, or the stock market's down. And your investor has a big smile on his or her face, and somebody says, well, what are you laughing at? And they're like, well, guys, you should be real estate investors. Well, what do you know about real estate investing? I don't know anything, but I know a guy or gal who does. Let me tell you what I'm doing. And they tell the story. And they're going to tell the story even better than you would. They're going to be bragging about you. Okay? So what's the person going to say after they hear the story? Yeah, they're going to say, well, what's his number? Right? And this happens. So this guy, Dr. Dave, he calls me up and he says, hey, my name is Dr. Dave. You don't know me, but I'm a friend of Jimmy's. And Jimmy's one of my investors. He says, Jimmy's telling all this stuff about what you're doing in real estate, how you're helping out families. He's got a picture of the happy tenants on his desk. He says, it's really, really great what you're doing. And I'm like, yeah, Jimmy and we've been doing this for years, making lots of money. Oh, yeah, forget about Jimmy. Okay, Dr. Dave will throw Jimmy right under the bus, right? Okay, forget Jimmy. Let's you and I talk. Okay, Dr. Dave, how do we do a deal? How do I get in on this? Well, I don't have a deal yet right now, Dr. Dave. I mean, I got a lot of people lined up, but I don't have a deal. I only get the best deals for my investors. I won't give them anything that's not like a top-notch grand slam. Really? Okay, well, where am I? Well, right now you're about number 5 on the list. Number 5? Yeah, I mean, I've got other people that want deals. Okay, fine. So 3 days later, I get an envelope in the mail. I open it up, and it's a $20,000 check made out to my LLC. And so I called Dr. Dave up. I said, hey, Dr. Dave, we must have a miscommunication because I don't have any deals right now. He goes, yeah, I heard your story. He says, but I got a question for you. He says, you said I was number 5 on the list. I'm like, well, yeah. He goes, does that $20,000 check in your hand right now, does that move me up the list at all? And I thought about it for a second. I said, you know what, Dr. Dave? I got to admit, I think that moves you right to the top of the list. He goes, that's what I thought. He said, so you keep that $20,000 in your desk. When you find one of those killer deals that I saw from Jimmy, he says, you cash that check, you send me the paperwork, and we're in. Oh, by the way, if you're as good as he says you are, I got $100,000, I got $200,000, I got to do something with it. Maybe you're my guy. See how cool that is? Okay, so the moral of the story here, if you do this, oh, by the way, lenders love pictures like this. Look, you gotta create value, guys. Showing other people, in really good deals, is a big thing. Okay, because they're not getting that from their stock market people. Okay, so did I ever ask anyone to borrow any money? No. Those words never came up. Okay? Did anyone ever ask me for my credit score or my job history? Did anyone call for a credit reference or a employment reference from a job? No. Did anyone ask me for 2 years of tax returns? Nope. Did anyone ask me for a financial statement, references, my mother's maiden name, my dog's whatever? Nothing. Okay? Because you're creating value, other people want to be part of that. Okay? You don't have to go through the interrogation of what lenders put borrowers through. Okay? And if you do this right, you can get 100% or even more of the purchase price. No closing fees, no points, no survey, appraisal. all that other crap. Okay, my closing costs to do private lending is about $12 to record a security deed at the county. And because you're educated or you're going to learn working with us, you can set this up as non-recourse lending. So you don't have to give a personal guarantee with this borrowing. You can actually set it up as a non-recourse lending, which means if something really bad happens, like a depression or whatever, the only recourse the lender has is to go after the property. And because you bought the property at a huge discount, they're totally secure. But you don't have to personally guarantee it. And let me tell you, if you're borrowing money from banks, if you're borrowing money from most other sources, you're going to be personally on the hook for it. And that may not be a good thing. So here, you actually don't have to be on the hook for it. Okay? So you get huge value created for the investors. In return, the money is unlimited, guys. Now, my suggestion is this. You can practice this strategy or this routine before you even find a deal. Just create a deal and get an opinion. Is this a good deal? It's a theoretical deal. And if somebody says, well, whatever happened to the deal, say, you know what, that one didn't work out. But there'll be others. Oh, okay. Yeah, find me another. Because now your conversation with that person is going to be even better. Okay? So I want you to practice this. So I should hear this all the time from you. Hey, you got a couple minutes? Can I get your opinion on some real estate deals? That should be your opening line. Never can I borrow money. If somebody comes to me and says, will you lend me money? Before I even think of anything, the answer is no. No. And worse, I might be spending the whole time listening to their deal, trying to come up with a nice way to say no. I'm not even listening to their deal. Okay? Because I'm already aggravated by the fact that they're trying to borrow money. Do you guys see the difference? This makes life so much easier for both parties, for all parties involved. Okay? And then you're going to create value like crazy for people and never have to chase money again. Remember, interest rates are like zero. They're like negative. So if you can get people returns, they're struggling. In fact, if their money is in the bank right now, guys, they're actually losing purchasing power because the rate of inflation is higher than the rate of interest. And they get taxed on the interest, right? So it's like you're creating huge value for people who can't make money because of the way the financial system is right now with the Federal Reserve keeping interest rates below what the market would be. So you're not borrowing money, you're helping other people. And in return, you help everybody. You're helping the sellers with their properties, you're helping the tenants. Hopefully they can buy your properties eventually. You're helping the community, you're helping lenders, you're helping investors. I mean, you're helping contractors, realtors. You're like at the center of the hub of the value creation wheel. And that's where the most money is made. Okay? So these types of pictures are worth millions of dollars. I'll give you a statistic. The median income in the United States is $58,000 a year for a family of 4. And 80%, now this is before the coronavirus, 80% of the US population cannot get a bank loan. Do you know how much opportunity there is for you? It's off the charts. So anyway, mic drop, boom. Take this back, learn how to do this, make it comfortable for everybody, and you will have people competing to fund your deals. You'll never have to worry about raising funds. Okay? So my name is Bill Oehme. You saw my phone number at the beginning of the video. If you need to call me, give me a call. Otherwise, I wish you the best of luck in your investing.